Good morning. It is Friday, June 19th. The days go by. We're back in the office. Seth is with us today. He's in the office as well. So it's probably the first time we've done one together where we're not at separate computers and not in the same space. And a lot of our staff is kind of staggered back and forth, Seth included. We hope all is well with your family and everyone is healthy. So we want to kind of just go through and do some quick, same type of themes as far as all of our videos this year, kind of going through some of the market things and some of the human reality situations that we're all in as we talk about the markets and how COVID's affected those. Getting right into it. I think the key thing is, we've titled the presentation today, coronavirus and financial markets. Typical of what we've done in the past. Looking at kind of our first slide. After that, we're starting to get some, you know, uh, real positiveness for everyone across the board. And it's a great thing. I mean, certainly, knowing that the economy is starting to reopen again. We're going through our phases, especially in our area in New York. Obviously, other states are ahead of us, and some states and certainly the city of New York is behind us. Um, but obviously, we don't want to let our guard down. So, obviously, the key thing is, knowing how things are looking, before you get into a situation like that. Real important to know. We call it know before you go. Sorry for my scribble there. But basically, you always want to check on the status. If you're going to start to venture outside the house, still practice physical distancing. I know that we all are in a situation now where we're just tired of it. We can see that already because we only opened our offices up about less than 2 weeks ago. It'll be 2 weeks ago Monday, and the amount of people that are coming in for personal face-to-face reviews really says it all for us. I know a lot of you may did the video thing or did it over the phone, and it sufficed, temporarily. But getting that face-to-face contact across the table from each other. The key thing is for us is that keep you safe, keep you healthy when you're in our offices, and certainly keep our staff safe as well as we're going through this. And hopefully this will ease along the way, but basically still want to practice that physical distancing. And we're doing that here when you're coming in for a visit as well. Stay close to home is obviously very important advice still. If you're going to travel, then there's certainly going to be people that are maybe not looking at your health the way that you would look at it. Certainly maybe not look at your health the way you and your family would look at it. So when you start getting into situations where there's strangers or environments where it's a little bit more loosey goosey, then you've got to be really careful to make sure that this doesn't spread even further. And we're seeing that uptick already in some of the states across the board. um, Plan ahead for facilities that might be closed. Play it safe. um, Choosing lower risk activities is really important, and again, leaving no trace. So the key thing is, a lot of places still have no restrooms, even when you're dining outside, which I know is wonderful. We did that last weekend here, on Route 9, with myself and Sally and a couple of our kids. So it was great to be able to have somebody serve us. We're outside, but we are still being smart about it, and I certainly hope and wish you'd do the same thing in your own lives as well. Even though I know it's difficult. Taking a break from the news. Listen, the news is becoming 10 times worse when it was during the coronavirus, right? I mean, obviously we're dealing with those situations which they're depressing enough, but then now you've got the politics of the election coming up in November. on top of all the rioting and looting and everything else that's going on. So taking a break from the news. I mean, I'm a big news person. I watch a lot of news, both from before I get to work, during work, and after I get home from work. And so I find myself, kind of just, taking a breather, taking stuff off. Even when I would listen to different programs on the way into work, on the way home from work, and now I try and relax and listen to music that I like and unwind from it. So, but certainly taking a break from the news is really important. Taking care of yourself, making sure that you get out there. The weather's beautiful out there. A little hot now, but basically, great opportunity to get out there, connect with others. Certainly there's still ways to get together, social distance, stay away from each other too close, but making sure that you still have that connection. And so connecting with others obviously very important. Uh, Goals, priorities, that's the key thing. So let us know how things are going. Certainly let us know if you have any kind of health issues that are coming up. um, Please let us know that. We just want to know. We care about you. We want to make sure that you're healthy, that your family's healthy. So, we're getting to the point now where if you don't already know someone that's had COVID, you certainly probably know somebody by now. And so, my sister had it for a month. I mean, she basically had a low grade fever for a month. It just never went away. I mean, so there's just so much that they don't know about it. Typically the people that try and quarantine themselves for 2 weeks, sometimes it's not enough. So if you're still exhibiting symptoms, it's not done. And certainly she went to have her antibodies tested, and that's what they told her, that she really still had the virus. So that's the key thing too. Um, when you come in our office, our office is open for in-person meetings. Sorry about the weed whacker outside. They just started as soon as we got on here. But we took a couple of nice pictures so you can kind of see it. Um, I don't know what we're going to do with all this plexiglass after we're done with coronavirus, but you get the idea that when you come in the office, especially in the Coles area, it was not protected. So we got a couple of big pieces of plexiglass that protect her, and certainly protect you as well. And then when you go into our conference rooms, a little hard to see it, but we've got plexiglass across the entire table. Um, and so that when you come in their office, we want you to be confident that when you're setting the appointment, that we're taking care of you. We're making sure that if you're sitting across from us, you certainly want to continue to wear the masks. You certainly can once you're in the office, or if you feel comfortable that you're behind the plexiglass, and I am as well, that basically you can be assured that basically we're on the other side and we're protected as well. So procedures are pretty important right now, and so procedure for us is very important, and we want you to know what it is for us. um, Obviously our office is open now to in-person meetings, but our outside door is locked to everyone. Staff members have keys. They'll let themselves in with a key. But for your own safety, we don't allow anybody in our office without basically contacting us first. So you'll call the office. You'll let them know that you've arrived, whether you're still in your car, whether you're outside our office door. Once you actually arrive at our outer office door, one of our staff members will thermal scan you. As long as you're under 100.4 degrees Fahrenheit, you'll be allowed in the office. Our reception area is closed. So a staff member will walk you back to our conference room where myself, one of the other staff members perhaps, will already be in the conference room. We'll already be tucked behind our plexiglass that faces you. You'll enter the actual office, and then basically you'll sit in front of your plexiglass closest to the door. One of the staff members will pull the door behind you closed so that you don't have to touch anything. And then, providing that you're comfortable taking your mask off and you give us permission to take ours off, we'll do that, and then the meeting will start. Once you leave, we'll all put on our masks again, and then basically We'll walk you out of, you'll walk out of the office on your own. And then basically there will not be another person in any common area that will run into you. And then if we'll check to make sure that nobody's in the hallway, and then you're going to be out, out of our office altogether and on your way. In our building, you are required in the entire building to wear a face mask. So you'll have to keep that face mask on until you get back into your car or outside the door. And then you're free to do whatever you want to do after that. So we've put a lot of thought into the process, um, and certainly that will hopefully help you feel a lot more comfortable, safe, healthy as you come to our offices for the foreseeable future. We'll let you know if that changes our procedure at any point in time. But I think if you take care to do those kind of things, the more we do it, the less chance that we have of spreading it and kind of becoming one of these hot spots again. When you look at coronavirus updates right now, you're looking at about 8.5 million people have gotten COVID-19 as of June 19th. Almost a half a million people have passed away, unfortunately, but 4.4 million people have recovered and climbing. So important to note that when you kind of look and see some of the data that's happening now, here's I guess what they're really most concerned with is that, when you look at some of the new cases that are popping up, there's not a lot here in the USA, but certainly, when you look at total deaths, I mean, we are certainly leading by a lot. Now we have 2.2 million people that basically have tested positive for COVID, but that is a function of how many people get tested as well. So certainly, when you look at these other countries, we are much higher, with the exception of India and China. We're much higher in population than some of these other places are. But we've also done a tremendous amount of testing as well. So that's key. When you look at how many tests we've run, we've actually run 26,000 tests in the United States. When you compare it to, let's say India, which has, a tremendously high population, at least 4 or 5 times more than we do, and they're 20 million tests behind us. So that's pretty impressive, but certainly you'll see more positive tests based on that as well, which is key. I think the key thing is to concentrate on is this next chart. And when you look at, of course, at the previous information, New York certainly has or had a tremendous amount of deaths. 29,000 people passed away in New York as of May 21st. From May 21st until now, you're talking about 31,000 deaths. So you can see in the last month, it's really dropped dramatically, with only about 2,000 or 3,000 people that have passed away in New York. Here's what we really want you to focus on is when you look at how many cases, let's say, have been in New York, you're talking about 582 people. Here's where the concern is. We're getting these spike ups now in Texas, California, Florida, Tennessee, Arizona. So these other areas are really starting to get flare-ups. And what you're going to see, I think mostly, is I can't see them shutting the economy back down again. It just didn't work. There's too many things that you can't ask that of people anymore unless it just became a tremendously difficult situation. I think you'll see states, like California, like Texas, like Florida, that maybe don't advance to another phase, maybe keep some of the larger groups from gathering, again, baseball games, football games, concerts, those kind of things. They'll limit those other events, but for the most part, it's hard to kind of just shut the whole economy down again and just start over. But those are the things that you have to be really careful about. That's why we want people to continue to have social distancing. Those kind of things are obviously very important. as we even move towards these next phases. And it's very hopeful in New York that we're going to get there a lot quicker. So we're going to shift gears now and talk a little bit about the economic situation that we're looking at right now.
Yeah, so this is one of the things that we like to take a look at. These are the leading economic indicators that came out yesterday. It always gives a good idea of how's the economy doing, and it's overlaid. The green line that you see there is actually the stock market. What's important to note from this data is that other than in 2008, 2009, these economic indicators are the lowest they've been since they started tracking it in 1970. And it spiked down dramatically faster than at any point since 1970. So it's kind of hard to put into words exactly how quickly this has all happened, other than the last time in most of our minds when we've gone through a recessionary period, we all remember how bad 2008 was. And we're basically at that level in a fraction of the time as far as your economic data. That being said, and one of the things that concerns us is the spike up in the stock market. You can see at the far right end of the green line there, it has spiked back up. Now, it's not like we haven't seen this before with negative economic indicators in the stock market going up. You could actually see in 06 to 07, the stock market going up while you have some negative economic indicators. Granted, that was before a recession. But you can also see during the height of 2008, the stock market starting to rebound when those indicators were at their worst. So it's not like we haven't seen this in the past, but it is concerning to see such negative economic data with such a big rebound in the stock market.
I agree. I mean, to Seth's point, we agree in this. A lot of our partners agree in it too. We're basically beating the same drum that, we're seeing a lot of good things happen, which is, less deaths, less coronavirus to worry about, economy that's reopening, maybe a vaccine around the corner. Those are all things that bring euphoria to the market, cause the market to go higher, and to think about the future. Markets basically forecasting what the future looks like, even unemployment figures, which we'll go over a little bit too. But realistically, when you look at a market that's rebounded like this, we still have, well over 45 million people that do not have a job. And so they've got to come to work. They've got to get back to work. And that's obviously what concerns us the most.
So jumping into those unemployment figures, you can see that we are making a little bit of progress as far as unemployment claims coming down that backside of the mountain. But it's also important to keep this in context. As much as these figures are coming down that back end, 1.5 million initial jobless claims would have been a record back on March 1st by a significant margin. We never saw more than 350 to 400,000 in a week at any time previous in the history of our country. So it's important to keep these numbers in mind that 3.3 million, 6.8 million, it's just by a factor of 10 or 15 higher than we've ever seen in the past. So as much as it's good to see this data trending downward, a key takeaway for us is it still would have set a record only 3 or 4 months ago by far as far as initial unemployment claims. And that really is where a lot of our concern comes down to.
And I think to Seth's point, I mean, even this past week, 1.5 million people filed an unemployment claim for the first time. These are first-time claimees. This isn't a repeat. This is 46 million people are out of work. I'm sure some of them, maybe earlier ones, we know that they've gone back. But realistically, it's going to take a long time to kind of get back to the swing of it. We ran into one of our clients who's a deli owner, basically, let go of some 7 of his people after the coronavirus initially shut everything down. Once he got basically some governmental help, tried to hire those people back. They don't want to come back because, he's got one woman that's been working for him 1 day a week for the last year. So she filed for unemployment. She gets $22.50 a week from New York State, but she's getting $600 a week from the federal government, as everybody does that has claimed and filed an unemployment application. Whatever your state's maximum is, $600 also comes in from the federal part of it too, through July 31st. So, this woman, well, girl, I should say, she's 18, getting $22.50 a week from New York and 600 from the federal government. She's getting 622 a week. She wouldn't even make that in a whole week if she worked 40 hours a week. So, she's gonna basically, sit on the sidelines till July 31st is over. Once the $600 goes away, if it does, then she'll finally come back to work. But, there's going to be a lot of people that basically find out what their true, situation is after July once they kind of start to look at that next phase.
So we get the question a lot of whether or not we are actually in a recession or not. All of our partners and we are of the mindset that yes, we are absolutely in a recession. But what is a recession? It's 2 straight quarters of either no or negative GDP growth. And so we have all of our data from the first quarter. Obviously, it was negative 4.8%. And that was the worst GDP quarter that we've seen since the height of the Great Recession, late 2008 and going into 2009. The real question is what do we see in Q2? We believe it's going to be a negative number, therefore we actually hit the definition of a recession. How bad that number is going to be is really the question. It's still hard to tell because there's such a delay on this data coming out what that number could look like. The point is how fast this has happened and how swift has really put a strain on so many areas of the economy that we might not even have really processed the data to understand the overall impact of it. And this is talking about that as well. There's a couple sectors that were hit dramatically harder, for example, and it makes sense, auto sales. People aren't out there buying cars right now because no one was driving for the past, several months. I know for me, there were weeks on end that went by that I didn't put any gas in my car. In fact, it's gotten weird kind of getting back in the habit of having to put gas in my car. Obviously, services have fallen. That's kind of obvious. No one's going out to eat. You're not going to hotels. We were expecting to see that one. The business investment, it's interesting because it was already down slightly. So it's ticked down a little bit more. It's nowhere near the 2008 levels, but especially with the PPP and the stimulus, we don't expect to see those numbers tick down nearly as bad, but we do see them getting a little bit worse. This is interesting. So food at home. So when you go out to your supermarkets buying food for at home, that has actually spiked up and has been a good thing for the retail sector versus obviously any restaurants, bars, hotels. I mean, these numbers are just so dramatically terrible compared to any time in the past. So it kind of makes sense. Obviously, people are staying in, they're cooking their own food more. They're not willing to, even if some place is doing takeout. I know that for my wife and I, we try to support some of the local restaurants by doing takeout, but even that, I mean, their numbers just have to be horrible. And there's been a number of local restaurants that we know that have just shut their doors completely. So hopefully with things opening up, we'll start to see those numbers pop up and get a little bit better than they were in the past 6 months. So this one is quite interesting. The stimulus from the US and international governments saved for China. This is looking at the fiscal stimulus as a percentage of our gross domestic product. Now, the global financial crisis happened over the course of around 18 months. And we're only about 4 months into this thing. But we've already responded quicker and with a greater percentage of GDP than we did for the entire global financial crisis. So say what you want for the bickering and everything in the politics that go on in Washington. One thing is clear between the Fed and between the federal government. This stimulus has been fast and it's been enormous in nature. So that gives us a lot of confidence going forward that they're not going to mess around and try to be cute with this. They've pumped a ton of money into the economy. And if you put it in perspective of the GDP, I mean, that's apples to apples. This is not apples to oranges comparison. So that money is there. It's really helping prop up the bond markets. It's helping provide liquidity and stability to the stock market and the overall economy.
Absolutely, especially when you look at China. I mean, look at how much money that China pumped into their economy during the global financial crisis. I mean, they're at 11, 12% of GDP that they actually pumped in to prop things up. Today, I mean, they're probably one of the lowest amount of money they're pumping into their country right now. So quite a difference in variables there. But nonetheless very important ones.
So this is important. When we look at all this economic data, we've mentioned this a number of times in past slides or in past presentations, that we still are in the camp that the market's going to retest the lows. This is going back to 1987, back when Dan started his career. What was it, 7 or 8 months after you started, you saw this downturn?
Yep.
And just because of all of the unemployment claims and the unemployment numbers, we don't have any confidence, or we don't have a lot of confidence that this hasn't fully worked itself into the stock market. And a great example, we were talking about the jobless claims before. I mean, I have a family member that was on furlough and was collecting unemployment. Unfortunately, we found out recently that he was let go from his job. So numbers like that, even though he was getting the stimulus, now we have someone that is going to be off the unemployment as of July 31st that was working and putting money into the economy. There's going to be situations like that that have not been baked into these numbers and into the stock market. So we're very much in the camp that we believe that we're going to retest the lows, and we even saw it in the past couple of weeks, the day that we really spiked down. I mean, that was just a huge downward trend, and even since then we popped back up a little bit, but we believe that not everything has been baked into what the stock market prices and the valuations are.
Yeah, to add on to that, I mean, you look at real estate in general, probably personal real estate, especially in our area in New York. I mean, obviously everybody wants to get out of the city, whether it's a combination of COVID and riots or whatever the case is. But so real estate up in the Dutchess County area and anything north of the city is just booming. When you look at commercial real estate, in the next 10 years, you could see a tremendously different landscape. Most companies, a lot of them, my two older sons work for investment companies, mutual fund companies. The ones in Nashville, ones in San Antonio, Texas. They've both been told that they are going to work from home at least through December, and you're going to have a lot of companies that will allow leases to run out and basically not renew those. I mean, people have been productive at home. If you give them the opportunity to be at home, and be, not to make commutes in and out of the city every day or whatever the case, then it's a tremendous advantage versus all the things that they spend money on with, coming into work, having coffee and snacks and all kinds of frills and things like that to keep employees happy. I think the average employee is a lot happier just not having to make a commute every day for an hour or two each way on the road, especially when you look at some areas like New York City. So it's going to be interesting to see the landscape and the way it changes in the commercial real estate area compared to others. To Seth's point, you're going to have, this is not over yet. You're going to have a tremendous amount of people that you'll clear the air after July 31st. Once that federal $600 a week stops, you're really going to see exactly, how much worse is it? Did people basically just hang on for as long as they can? And now finally they're saying, okay, enough, I can't take it anymore. And we're seeing that a lot, even for the states like ours that are going into phase 2, some in phase 3, when you're still only able to eat outside of a restaurant, that next phase will start next week in New York where you'll be able to go inside. But at a 20 to 25% capacity, it costs these places way too much money. They're still losing money by being open and trying to serve 25% of the patrons. So it'd be quite fascinating to see how it further changes.
So real quick, one of the things that we have been doing is buying higher quality debt. This comes on recommendations from a number of our partners, but also for the first time in history, the Federal Reserve is actually buying high quality corporate debt. We want to include this as to why. All of the debt that we're buying, so these are bonds that are issued either by municipalities or by different companies, are investment grade. So you can see on the left side the AAA, AAA, the AA, and the single A. What's key here is the default rates. So you can see that all of that investment grade debt that we now have purchased historically has a very, very, very minuscule default rate. And that's why it's key. It's also why the Fed has been buying it. The Fed's, it's not like these people are stupid. They're going to protect their assets and they're going to purchase securities that will make their balance sheets strong. So even on corporate side, when you get down to the triple B, it's only a 3.7% potential default rate. So this is key for us going forward. Our investment philosophy is we're investing in high quality companies and high quality debt instruments versus, as you can see, highlighting once you get to triple C, and basically they're junk bonds, you do get better yields on them, but you can see the actual default rate is significantly higher. And that's just not a risk, even though the yields look attractive, that we believe any one of our clients should be taking right now.
Absolutely. Couldn't say it any better. And we're doing really well in that space. And it certainly doesn't hurt the fact that the federal government's basically supporting that too by buying a lot of those bonds up, which is great for us. Great for you too.
So I wanted to make sure we got a little bit of good news in, although there's a caveat to it. This is a retail sales have rebounded from April to May. The caveat being that it was so bad in April that we have to keep it in context. We saw growth in clothing stores, furniture, sporting goods and hobbies, electronics. The point is there has been a spending bump in May. Do we know if it's from people just having cabin fever or the stimulus? We don't know where that comes from. But the point is retail sales were hit so negatively and so adversely. We were bound to see something like this, but it's good to see money moving in the economy. That's going to get the ball rolling better and faster going forward. So there are a couple good lights at the end of the tunnel that we do see some positivity on.
Okay, so what's our plan going forward? The same as what we've been doing. We've been investing in companies with strong balance sheets. We're going to continue to do that. We're going to continue to have high quality bonds, AAA, AA, basically, quality corporate bonds, quality municipal bonds is key. Taking advantage of technology opportunities. The NASDAQ's still doing well in this day and age when people are going to be, more and more people are going to be working from home. More people are going to be still at home, even though you've got the green flag that you can still go out and resume some of your activities. I'm not going to say normal because I think we're going to have to get used to a new normal, but for the most part, technology should be still in a good spot, and we're looking and keeping our eyes open for that too. Not trying to time the market. So you can see that, Seth and I in the last several weeks, once the market had some good days, we continued to peel off a little bit of money out of this market because we know this market's had a very nice rebound since the bottom in March. But again, not truly convinced it's over yet. And if it's not over yet, then certainly having some cash on the sidelines is helpful in your portfolio. It causes us perhaps to lose less money if the market starts to go back down the other side. And on the same token, it also provides extra money in cash that hasn't lost money that we can now buy into certain parts of the market that we think are bargains or perhaps get hit hard during the next retrenchment. So, days like in the last few weeks where you saw the market go down 1,900 points in one day because, again, upticks in coronavirus, whether it's here in the U.S., whether it's in other parts of the world, I think obviously, you're going to continue to see days like that because, again, it's still a lot of people that are propping this market up because they've missed out on a lot of the drop or the increase from March, and perhaps they got out at the worst possible time thinking that this was going to go into a depression perhaps, which some people were forecasting, and we certainly just don't see that as well. So where do we go from here? I mean, basically, as things open up, again, no excuse to be reckless, right? Continue to do your social distancing, wear your masks, go into stores, your mask is protecting somebody else, and certainly someone else that's wearing a mask is there to protect you as well. So, if you have any questions for us, I mean, we're here, we're open. So, I think that you'll find that the procedures we put in place to make sure that when you come in for a face-to-face meeting with one of us, that you're going to be very safe and secure, which I think is obviously the key thing as we look towards coming out of this eventually. And who knows where that will be. I mean, they talk about a resurgence all the time in the fall or perhaps sooner. It's anyone's guess at this point. That's up to the medical community. But all we can do is just kind of stay focused, keep doing what we're supposed to do, social distance, staying away from each other. That's obviously the key thing, and we'll get through this. So anything to add, Seth?
No, I'll just say enjoy the weekend. I'm not sure what the weather's going to be like, but it's getting hot. And just to reiterate what Dan said, we always base everything on that plan. We're not shooting from the hip here. There's a lot of thought and a lot of process that goes into every decision that we're making with all of your financial plans and all of your accounts. So if you have any questions, definitely reach out to us. We're here whenever you need us.
Couldn't say any better. Have a great weekend. Call us if you need us, and look forward to seeing you in the office soon. Have a great weekend.